joins us now with his unique perspective on the economy, deal-making, so much more. I want to welcome Blair Effron. He's the co-founder of Centerview Partners, and a corporate advisory and mergers and acquisition firm that is advised on more than $4 trillion, that's with a T, trillion dollars in transactions, most recently working on behalf of Disney in its proxy contest against Nelson Peltz. So congratulations to you, sir.
Thanks, and thanks for having me. Becky, good to see you.
Good to see you, too.
Before we even get into where we are in the markets and the economy, I'm curious if you could take us inside, from your perspective, the Disney Peltz drama, and what you think, if there was a lesson in it.
So, logical question you would ask. To me, the lesson is real simple. When a company's performing well, investors have an easy choice. And I think Bob and his team made an easy choice. Disney has been performing well, and it's been performing well for over a year. The market didn't necessarily see it until the last 2 quarters, but when you talk about $8 billion of cash flow, when you talk about a $3 billion buyback, right, raising your dividend twice, more importantly, strategically getting DTC on the right path, and the market will see the growth, getting sports, ESPN on the right path, content, 10 of the biggest, 13 biggest releases last year, Disney. You know, Bob is here to, as he said, go from fix to build. Right. The company is in a build. And that's going to be for a generation, not for quarters. And when you do that, you don't introduce distraction into the boardroom.
We asked Michael Froman, the board member who was the target of this,
sure,
who was on the broadcast just in the past 2 hours, about whether you think ultimately Nelson Peltz and Ike Perlmutter come back again. And even if they don't, do they act as some kind of modulator, regulator, pressure point on the board to perform?
So I tell you this, Bob Iger has a big pressure point. It's called Bob Iger. Bob came back to get the company back to its rightful spot at the top of the pyramid. That's where they're headed. Bob will keep pressure, as will the rest of his talented organization, on doing just that. So I don't think Nelson comes back for one simple reason. I believe strongly the company will continue to perform.
The only thing I would say is, look, Iger and company had all of these plans in place. They were moving and doing all the things that Peltz was complaining about, already in action. But you did see a few things that happened just in the last week or so. One thing would be maybe reaching out and making amends with Florida, state governor there. That was something that I felt like it was kind of tied to this, trying to wrap up all those loose ends before this vote.
And I can comfortably tell you, Becky, it wasn't. Okay. That's a discussion that has been ongoing. And obviously shareholders did speak about issues that matter, DTC in particular, succession in particular. And the company has a robust succession committee planning process. You heard from Mike, James Gorman has been through his own succession, Mark Barker, his own succession. And they are taking it, as they should, very seriously.
I got one more for you in the media space, and then I want to go broader. Paramount.
I've heard of it.
You've heard of it. You're involved in the middle of it.
A bit.
And there's a big governance question about how a transaction could take place so that shareholders are treated fairly, so that the Redstone family is able to get as much money as they can. Can you speak to how this could work or not?
So obviously I can't really address it other than to say that all parties involved, Sherry Redstone and her position, the committee representing public shareholders and their position, the B shares, are taking every day exquisitely seriously in terms of doing the right thing, the right review, the right thing for the company in the short term, the long term, and are just highly focused.
You think there's a deal in the next 30 days?
You know, I can't say that.
I guess my question would be, why negotiate exclusively with one party if there's a potential higher offer?
And you know, I can't say that either. But all I can tell you is that theoretically, you would do something, weighing all your options, thinking about what is doable, what is not doable, what is real, what is not real, and making sure that you're making the safest play for shareholders in the way that you're combining certainty and safety with also maximization in the short term and the long term. That's what the company's focused on. We will see what happens.
Let me ask you a broader question about the economy. To the extent that M&A and deal making and the like are a barometer, we've talked about it, of confidence, if you will, in the economy, where do you think people really stand when you talk to boards and CEOs about sort of where we are in today's economy?
I think the economy for the foreseeable future, Andrew, remains robust, resilient. I think you're going to see that in the first quarter earnings. Again, you will see, my bet is 75% or so of the S&P 500 exceed earnings expectations. The market has it about 4%. You'll do better. Continued tailwinds from the consumer. You have, we'll find out in a half hour, but let's assume unemployment remains at 3.8%. That will be 25 months in a row below 4.5%, best record in 50 years. So the consumer is better, particularly the top three quartiles, than people give credit for. You still have government spending, $5 trillion of bipartisan spending from CHIPS, $1.2 trillion on infrastructure, IRA. All of this is helping the markets. And finally, the U.S. economy has really become the envy of the world. So the bigger question is, how sustainable is this? And I believe, as others do, that it actually is sustainable.
Well, so then the question becomes what you think the Federal Reserve needs to do or doesn't need to do if you think the economy is humming along and is super strong as you
seem to indicate. Hats off to the Federal Reserve for managing so deftly to this point, keeping the economy growing, bringing inflation down, bumpy for the last percent, obviously, and keeping employment where it is. I happen to believe that when the Fed raised its estimate from 1.5% growth for GDP to 2%, they're to prove conservative. My bet is that the common wisdom has been 3 cuts during the year. I think that'll prove to be optimistic.
You give the credit to the Fed, or you give the credit to the Biden administration? I ask because we're in the middle of an election year. You've historically been a supporter of Democrats.
I think the administration has obviously done a strong job getting legislation to help the economy. As I mentioned, $5 trillion of spending, important. But don't underestimate the power of the private sector. We have leaders across all these companies who know how to operate nimbly. We have a phenomenal demographic in this country, unparalleled in the world. We have phenomenal technology. People don't appreciate AI. It's going to add $4 trillion potentially over the next 10 years to GDP. 43 out of the top 50 AI companies are U.S.-based. So we have all of these really strong tailwinds that I believe will make the economy.
So you're in the Steve Cohen camp of the AI phenomenon is almost being discounted, meaning...
if he's in that camp, then put me in. I didn't know that he was there.
Would you be shocked if there were no rate cuts this year? And if so, what would that mean for the markets?
That would
and M&A
surprise
activity?
me. If there were, so the rate cut is a signal. Mm-hmm. Well, if it goes down a quarter point, it's not the impact financially. It is a big signal. And remember, a rate cut, the past 4 times rates have come down. The 12 months following that, GDP has grown at more than 3%. The markets have been up 25%. So it's a very positive signaling. And given that I think we will have inflation more or less under control, more or less, and going the right way, I would be really surprised that we didn't get a rate cut.